I really like the management team. They have one of the most advanced uranium projects. Their Phoenix deposit, it was actually considered the world's best undeveloped deposit of any commodity by the Mining Journal. The Mining Journal is highly respected, and a ton of research goes into that. A ton of quality research goes into that. And Denison's Phoenix project is considered the world's best of any commodity.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have our resident mining analyst, Jordan of Mining Stock Monkey. Jordan is an expert in dissecting company balance sheets and finding undervalued opportunities. He does deep dive research and has a relentless curiosity about the metals and mining sector. In today's discussion, we're going to talk about gold, silver, and uranium. We will ask company-specific questions, the ones that you submitted. Jordan has a special gift for you, so stay tuned for that. Jordan, thank you for coming back on the show.
Glad to be here, Steve.
The pleasure is all on this side of the table, sir, and we have what I like to call a high-quality problem. We got so many questions, we couldn't possibly get to them all, but we're able to consolidate some of them, so I think we're going to hit a lot of them, and yeah, we'll get to as many as humanly possible. So if we could get right at it, Winston wants to know, he says, thank you both very much for your time. You're welcome, Winston. He says, what does Jordan think about Eric Sprott's recent stake in Highcroft Mining?
Well, first of all, Eric Sprott and I have very different investment styles. He invests in a ton of companies, like he probably has 100 different investments. So there's no way that he could follow all these companies and know all of them very well. So I bet he has a whole team of people working for him to help him stay abreast of everything that's going on with his investments and within these companies. So there's that. But also in terms of investing style, his and mine are very different. Like he invests in a lot of junior companies that have huge potential, huge risk, but also big potential. So that's a very different investment style than I'm typically taking. I'm typically not risking all of my money on investments. So when you see him invest in something, you have to keep that in mind, that he's willing to lose all of that money. And he has his investments spread over many, many different options. Now, with that said, Highcroft Mining, this is a gold and silver company in the US. They have a very large deposit. It's very large, but it's low grade. And it's a development project right now. They're not making any revenue from this. But you know what? Between their long-term debt and their gold prepays that they have about $160 million of debt, which is very unusual for a company that's going through feasibility studies. Now, typically you see companies raising money via equity as they're going through this process. But in this case, they already have a bunch of debt. And then what's typical is that when they get ready for a construction decision, like right around that time is when they get financing, and that's when they take on debt, right when they're about to start their mine build. But that is not the case here. So they already have a bunch of debt with no revenue. And that debt is at 10 or 11% interest rate per year. So their quarterly interest payments are pretty significant, and considering they don't have any revenue, well, that's eating into their cash quite a lot. But when it comes to Eric Sprott investing in Hycroft, he comes at it through a different lens because he has the ability to fund the whole company. Like he has the ability to give the company $100 million if they need it. So that's something to consider as well. Now, Eric Sprott isn't just a shareholder. Sprott Lending also has a $15 million loan with them, and Sprott has a royalty on the project. So that's something to consider as well. Me personally, investing in Hycroft today, I would be terrified because they already have all this debt. And I don't have the ability like Eric Sprott does to fund the whole company if needed. So, yeah, I don't know if I really gave you a good answer there, but it's just two very different investing styles and approaching it in very different ways. Now, if this works out and they turn this into a profitable mine that has 10 million ounces of gold and like 4 or 500 million ounces of silver, this could be a huge winner. Maybe it's what, 100 million market cap today. Maybe it's a 3 billion market cap in the future if everything works out. Now that's a gigantic if, but there's a lot of upside, but you could also lose all your money.
Okay, so what I hear you saying is that Eric takes a bit more of a shotgun approach, and he's probably got 100 different investments and a team working under him, and he expects most of these to be zeros and very few to be heroes, but the ones that end up being heroes could be like Highcroft Mining, where it goes from 100 million to 3 billion, and then that just pays for all of his losers. But as far as where you are right now, investing in a company that has massive amounts of debt, when typically when they're exploring like this, that's usually not something that you want on the balance sheet, especially when they got a 10 or 12% clip coming out of that debt every year in the form of interest payments. It's just not something that you're interested in right now, but you could certainly see how it fits into Eric's portfolio.
Yeah, for sure. I can definitely see how it fits into his portfolio. I don't think it would be a good fit for my portfolio, but like he has this view that he's willing to take a lot of risk. He's extremely patient. Like his positions can be way down 5 or 10 years later, and he's still put money into the company. Now, you, your average retail investor is not that patient, and they're not willing to keep putting money in after their initial investment is down 90% over 7 years or something like that. They're like, no, screw this company. But the way Eric Sprott looks at it is he's shooting for big winners. And when he gets huge winners, he looks at it like that his losers don't matter because his winners are so big.
Yeah. Okay. Whereas you take more of a, instead of the shotgun approach, you're taking more of a laser sniper approach.
Yeah, and more cautious. He's willing to take a lot more risks than I am, and his bankroll can handle it.
Yes. Okay. Hagen wants to know. He says, what's Jordan's current view on Equinox, given production issues, declining revenues, and increased operating costs? Can they turn this around in the near term, or do we have much further downside to go?
So they just bought Calibre Mining, and the guys at Equinox Gold, they're excellent mine builders. The guys at Calibre Mining are awesome mine operators. I think you combine those two teams and you have a huge winner. And you keep in mind, this is backed by Ross Beatty, who's been successful time and time again over his very long career, his multi-decade career in this industry. So is this going to be the time that Ross Beatty fails after all those successes and after all the experience and connections that he now has? I highly doubt it. I highly doubt that this is the time he fails. But we have to be patient with that. And this isn't something that's going to turn around immediately. And yes, they've delivered a lot of disappointments to the market over the last few years. Like they finished building their Greenstone mine on time and on budget, but that was really the only highlight of the last few years. Besides that, it's been mostly disappointments in terms of lower production than expected, higher cost than expected, problems in Mexico at the Los Filos mine, things like that. But with the Calibre team now taking over the COO role and basically the operations of Equinox and bringing Equinox's experience into mine building and finishing the Valentine mine and the Valentine expansion project that's going to be coming up here, I think this is probably going to be a winner for patient shareholders. But yeah, the key is patience here and let the team do what they do.
Okay, so you see this is a really good synergy. In other words, Calibre's really good at operating mines, and you love it that they're taking over the COO spot. Equinox is really good at expanding and building mines. Ross Beatty has been doing this for a long time. And is this going to be the time that he fails? Probably not. So you're betting on the other side of that. So you like this transaction?
Very much, yes.
Okay. All right. We got a follow-up question here. It says, Steve, do you think from a technical view, 560 and 520 are good accumulation points on Equinox? Yes, I do. Yes, I actually have a limit order that hit yesterday or the day before around $6. I have the same one at 560. Instead of 520, I have $5, but I see why you see 520 as well. And James wants to know. He says, "Hi Jordan, I am a subscriber to your newsletter." Welcome, James. "What mid-tier precious metals companies are you tracking that you think could have a good chance of being added to your portfolio and recommendation list in the near future?"
So I don't share my watch list publicly because I don't want people front running or trying to guess what I might put in the portfolio. And a lot of times things are on my watch list because they need more research on my part. So I I wouldn't want subscribers going and buying from my watch list when I haven't fully vetted the company myself. So that's not something that I share, but in general, I'm waiting for a pullback in the precious metal miners right now. Because, well, I have plenty of exposure already. So if there is no pullback, I'm good. I have enough. So I'm coming at it from that viewpoint, but also the technical analysts that I've seen, they see that a pullback in gold is probably fairly likely here. So I have that. I'm looking at that as well. So yeah, I'm trying to be patient before putting any more mid-tier precious metal miner or royalty companies into the portfolio.
Okay, so you could see a possible pullback coming. You don't really want to share your watch list because you don't want to put your name behind anything that you haven't fully delved into. But yeah, if there is a pullback, you're ready for it. If not, you're positioned enough as it is, and it's not a concern.
Exactly.
Okay. Peter wants to know thoughts on sticking with the gold theme here. How do I pronounce Steepy Gold? Steppe?
I'm not familiar with that company.
Okay. Um, Dom wants to know thoughts on, okay, we just went over Equinox, so we hit a 2-for-1 there. Thoughts on B2 Gold?
B2 Gold. So any day now, like we're recording this on June 25th, it should be literally any day that they announce first gold pour at their new Goose mine up in northern Canada. So that should be a positive catalyst for the company. That should do good things for the share price. But then first gold pour is a long way from commercial production or like a long way from nameplate capacity as well. So what's going to be really important there is how the ramp up goes. And also any day now, we should be seeing the Fekala regional permit, the exploitation license from the Malian government. Now, when they get that, that's going to be another huge catalyst for the company. I don't love what I'm seeing in Mali with what's going on with Barrick, but something about Barrick is Mark Bristow has bad blood with a couple of the lead negotiators in Mali. So this goes back to his days of operating Randgold. And the person who was running West Africa is one of the lead negotiators. And then the person who was running the underground mine at Luolo is also one of the lead negotiators. And these guys, they both resigned from Barrick, or well, Randgold in the past. And one of them even lost their stock options that had already vested when that happened. I don't know the details of that, but this is an in-depth article from Reuters that I read a while back that they talked to a whole bunch of people there in country. So there was bad blood with the negotiators there, and I also don't think he's Mark Bristow from Barrick has approached the negotiations in the best way, like saying publicly that they're being unreasonable and things like that. Whereas B2 Gold, I think, approach the negotiations a lot better. Just flying to Mali and talking to them privately, asking like, "What do you want? How can we make this work? Let's make this work for everybody." And then they came to an agreement. So I think B2 Gold's Fekula mine is reasonably safe from any type of expropriation or further action from the Mali government, at least in the near future. Now, who knows what could happen several years down the road, but yeah, with Barrick basically getting their mine expropriated, or that's the way it looks like it's going. It's under government control for what they say is the next 6 months, but I could easily see that being indefinite. Uh, but anyway, that kind of worries me. And then you have the Sahel states, which are Mali, Burkina Faso, and Niger. This is this alliance between these three countries, and we just saw Niger expropriate Orano's uranium mine there. So just in the past week or so, there's essentially been two thefts of mines from the governments of the Sahel states. So that makes me nervous about my investments there. But
Okay.
overall, B2Gold's a good company. They have the management team is highly qualified. They've had a lot of success in the past. Now, they'll probably have more success in the future.
Okay, so we got some, you like B2 overall. We got some catalysts coming up here. Literally any day here, we could have first gold pour at Goose, which would be awesome. There's a bit of a runway there to the ramp up, going up to nameplate capacity. We'll see if they reach that. That could be another catalyst. Also in Fekola and Mali, we could be getting their permits coming up. Bit of a caveat there. Mark Bristow is having trouble with Barrick, kind of in the same region, getting his permits, but you're hoping that B2 has better relations with the big thinkers in Mali than Barrick does. And so far, it kind of looks like they do. But that is an increasing political risk, kind of in the Sahel states, the Mali, Burkina Faso, and Niger. But hopefully B2's personal relations and political relations out there will outweigh that.
Yeah, more or less. I really didn't like the updated feasibility study on Goose that they released a few months ago. That was really ugly in terms of the costs they're looking at for that compared to what they were during the previous feasibility study. But they're working on some other things that may improve those numbers. So we should be getting more information on that as the year goes on, maybe later in the year.
Okay. A gold royalty question. AJ wants to know any opinion on elemental Altius royalties.
Yeah, elemental Altus.
Elemental Altus.
So yeah, I like this company, but there's been some recent news from Tether taking a big stake in it. So if you're not familiar with Tether, basically this is a stable coin. So people who are invested in crypto, like when they're trading in and out of Bitcoin, for example, like they may see that Bitcoin is overbought. So then they sell their Bitcoin and they buy Tether. And Tether, for every $1 of Tether, they have at least $1 of assets. Historically, this was mostly in US dollars and in treasuries and T-bills and things. So Tether has started they have a substantial stake in Elemental Altus now, but this news has pushed the stock price way up, and the stock price is now higher than I would be interested in buying the stock at. But I think this news from Tether has bigger implications for the precious metal space because Tether has extremely deep pockets. They have $150 billion of assets. 150 billion. They get these audited every quarter. Their last audit was on March 31st. These are independent audits that are done. So their next audit is going to be in a few days at the end of quarter two. So at the end of quarter one, they had $150 billion in assets. 4.5% of that was in precious metals. What's that come out to? That's $6.75 billion in precious metals. And then they have 3% of their assets in what they call other investments. So I imagine that Elemental Altus would fall under other investments. So 3% of $150 billion is $4.5 billion. Now, let's say they put two, like just a couple percent of what they have in assets into precious metal royalty companies. That's going to move the stock prices like crazy. As a matter of fact, we might have already seen that. At the same time that Elemental Altus stock price started going way up in March, we saw the stock price of quite a few other royalty companies take that same trajectory. So if you just look at the 3-month stock chart of various precious metal royalty and streaming companies, you'll see similar stock charts there. So I have a feeling, even though this hasn't been released publicly, that they already have significant stakes in some of the others as well.
Huh.
Uh,
That's really interesting. Okay. I just thought, I never looked into this. I just assumed Tether was all in treasuries, but they have other investments as well. And well, interesting. Okay.
yeah, so about 85% is in government debt, T-bills, treasuries, that kind of thing. So 15% is in something else. So what if that goes to 20% in something else or 25%? That is a lot of money. And if like they're clearly interested in precious metals, considering 4.5% is in precious metals, and then they already own something like 40% of Elemental Altus. So, I mean, if they put another $1 billion or another 2 billion or $5 billion into precious metal royalty and streaming companies or other precious metal, maybe even miners, high quality miners, it could really, really move the stock prices.
Yeah. Yeah. Very, very much so. Just to put that into perspective, the market cap of Tether is like 2.5 times the market cap of Newmont Mining. So huge, huge market cap. Okay, moving on to silver. Silver, Amid wants to know your thoughts on the best silver stocks to buy if we make an assumption that silver will hit 60 US dollars an ounce.
Um, the the question isn't complete enough to give a good answer because we're assuming like we have a let's say we have a guarantee that it's going to hit $60 an ounce. We would have to know over what time frame. Are we guaranteed that it's going to hit it in the next 6 months? Or are we guaranteed that it's going to hit it between 5 and 10 years from now? Like if we're talking the 5 or 10 year time frame, I would say go with the highest quality silver company with the highest margins, Wheaton Precious Metals. That they're like, if the price of silver goes to $60 over 5 or 10 years, Wheaton Precious Metals is going to do very, very well. They have lots of assets, are very well diversified. They have quite a few assets also in development that have silver exposure as well. But if we're talking 6 months from now, like if you had a crystal ball and you knew that silver was going to go to $60 within 6 months, what would you want to buy? You would want to buy the silver companies that have a lot of exposure to silver. So a lot of these so-called silver companies only get 20 or 30% of their revenue from silver. So look for those companies that have more than 50% of their current revenue from silver. Because like, let's say a company has 20% of their revenue from silver and the price of silver goes way up. Well, yeah, that'll benefit them, but nothing like how much a company with 50% of their revenue from silver would benefit. But also, you're going to want to look for the highly leveraged companies. These are the bad companies. In general, the highly leveraged companies are the bad companies. And you would want, if you had a guarantee that silver was going to go to $60 in the next 6 months, you would want to pretty much buy the worst silver companies you could. Now, what do I mean by the worst? I mean the ones with the most debt, the highest leverage in that sense, but also the ones with the highest operating costs. So what's silver at today? I haven't looked. Let's say it's $35. And there's a company out there that has an operating mine, but it costs them $35 an ounce to mine it. So that is a very high cost silver mine. But if silver went from $35 to $60, you would have them earning $0 an ounce today to earning $25 per ounce produced 6 months from now. So the stock price of that company is going to go wild if this price of silver went to 60 really fast. But keep in mind, buying those companies also come with the highest risk. Because if the price of silver goes down, they suddenly go from making $0 for every ounce of silver produced to losing money for every ounce produced. And if they also have debt, well, then that company could go bankrupt, and you could lose everything. So, I mean, if you're so confident in the price of silver going up very quickly, yeah, that's the way to make the most money, but it's also the way to lose all your money the fastest if it goes the other way.
Okay, okay. Because the ones that are producing silver and making a profit now, that's already priced into the stock, so you don't get as much kick on the other end. Um, okay, Peter wants to know. He says, "I am a subscriber to your newsletter and like your fundamental analysis on mining. Your analysis on Aya Gold and Silver, please, would be appreciated."
I'll consider doing a video on that. I still have more work to do on the company, so I couldn't share like a valuable opinion with you today on that.
Okay, that's an authentic answer. And Cos wants to know, "Hi Jordan, I was looking at silver optionality plays that are cheap, market cap per ounce in the ground. I noticed that these companies are very cheap. What is your opinion on them?" He kind of lists some here. I'll go through maybe the first one here, Silver Dollar Resources.
Yeah, so I saw this question on your community tab, and I actually wasn't familiar with any of those companies that he was asking about.
Oh, all right.
Ho-
Okay.
However, I would like to shed some light on this because I have done a deep dive into companies like this where they have like it's a very low price per ounce in the ground in terms of what you're paying for their market cap relative to how many ounces they have in the ground. It's a very low price. And almost every time I've done a deep dive into one of these companies, I find a fatal flaw that tells me I don't think this is going to work. Sometimes it's a problem with the deposit. Other times it's a problem with management. Other times it's a problem with the balance sheet. But those times that I don't find the fatal flaw, it makes me afraid of what am I missing? What I don't know that I don't know. Because clearly the market probably sees something. So other people smarter than me who know the company better than me see something that I haven't yet. And that always makes me really nervous. So like if I'm super interested in it, yeah, I'll dig and dig and dig, and I usually find something. I usually find the problem. But when I don't, I'm scared. So there's that.
Okay. There's a reason that it's only a nickel an ounce in the ground. The answer is there somewhere. Okay.
Usually, yeah. And
Okay.
sometimes it's because the CEO is horrible and is using the company as his personal ATM, taking as much money from it as possible. Other times it's never going to get permitted. Other times the economics are just way too bad to ever make sense. Things like that.
Okay. Okay. All right. Moving on to uranium. Derek has a few companies here listed. Uranium Energy Corporation.
I'm not interested in buying Amir Adnani companies. He has a suite of companies, Uranium Energy, Gold Mining Inc., Uranium Royalty Corp., and Gold Royalty. Those are like the four main ones. And he's taken a salary from every one of them. Yet each one only gets a small portion of his time. So I feel like there's a lack of focus there. And uh, I'd rather not get into too much detail about this, but let's just say that some of his business practices don't align well with my values, and it makes me want to avoid his companies.
Okay, that's an honest answer. How about Denison Mines?
I really like the management team. They have one of the most advanced uranium projects. Their Phoenix deposit, it was actually considered the world's best undeveloped deposit of any commodity by the Mining Journal. The Mining Journal is highly respected, and a ton of research goes into that. A ton of quality research goes into that. And Denison's Phoenix project is considered the world's best of any commodity. So that's a glowing review from them. But I like Denison's management a lot. I also like that their mine build is almost already fully funded, even though they haven't done any financing. You know, Denison's management team was smart enough to invest in physical uranium back when it was something like $20 a pound. They're like, okay, hey, we have cash. We know the uranium price has to go up. Well, let's just buy uranium. We're going to need the money to fund our mine build. So let's buy it here super cheap. Us buying will put some upward pressure on the uranium price, but also it will allow us to fund our mine build when that time comes. So now they have something like $150 million in physical uranium. There were other companies that did that as well, but Denison was the first one to do it. They were the ones smart enough to realize that opportunity. And they have a lot of other projects as well, where like other companies are advancing some of their other projects. So they kind of have like that project generator business model in addition to them advancing their highest quality, most advanced projects. Now they should have their final permits to start construction in early 2026. And if they get that, I think that's going to be a big boost to the stock price. And then they should be able to start construction very soon after. They'll have no problem financing the mine build. Like I said, it's almost financed already. They'll have to raise a little bit more money. But yeah, this is going to be one of the fastest development projects to get into production.
Okay.
And yeah, if their mining method works, which and this is a case where I think it's a very high quality team. And I'm trusting the team to make the best decisions of the very best mining method to use. Their mining method that they're using for this is a little bit experimental, but they've done quite a bit of work, and all the work they've done so far shows that it will work. And if it does, I think Denison is going to be a home run. Now, if it doesn't work, they do have other assets to backstop their valuation, and they would have to invest more money into the mine, and the economics wouldn't be as good, but it would still be extremely high grade, and it would still be a great deposit that they have there. And they also have an interest in an operating mill as well. So that's earning them a little bit of money right now, and they don't have to build a brand new mill to get a mine into production also. So lots of good things with the company. I like it a lot. It's gone up in price quite a bit since the lows in April, and as have other uranium companies as well, both developers and producers. In a lot of cases, I don't think this makes sense because over the past couple of months, the uranium price has gone from $65 a pound to $75 a pound. And that has increased. Let's take NextGen, for example. NextGen, huge undeveloped uranium deposit, probably the best undeveloped uranium deposit in the world. Their deposit probably isn't going to be in production for 7 years. Why should a $10 move in the uranium spot price today make the price of NextGen go up by 50%? There's no reason for that. The price of uranium today does not matter to NextGen. Like, it doesn't matter to a company that's going to be producing uranium 7 years from now. But why has the stock price moved so much? Uranium investors, like the uranium speculators are, how do I phrase this? They're so focused on the narrative that the stocks sell off like crazy when the narrative is negative, and they go up like crazy when the narrative is positive, and it changes so rapidly. So these uranium stocks are incredibly volatile, and they're actually really easy to trade because you just have to do the opposite of whatever the narrative is. So, and a pretty good proxy for this is the Sprott Physical Uranium Trust. If the Sprott Physical Uranium Trust is trading at more than a 10% discount, a lot of times it's at a 15% discount to NAV. That's a good sign that the overall uranium narrative is very negative, and that's a great time to buy. When there's no discount to NAV in the Sprott Physical Uranium Trust, that's probably a good time to take profits, or maybe a good time to lower your exposure to uranium. But yeah, it's interesting.
Okay, that method that you just described in the last 20 seconds is what I've been using for the last 3 years in uranium, and it just works every single time. I keep waiting for it not to work. I'm like, this is eventually going to get out and it's going to stop working, but it just doesn't. It just works every time. Okay,
Steve, up until now, it's been such easy money.
yeah, yeah.
It
I
really
think it's
has.
going to get tougher as time goes on, but like kind of getting into the later stages of a poker tournament, but we still got a bunch of free money on the table. Okay, so you like Denison Mines. Their Phoenix deposit holds the world's best undeveloped deposit of any commodity. I did not know that. And they're set to start construction sometime in early 2026, so that'll be a catalyst for it. And if they can actually pull this off, this ISR in situ recovery, they have some of the highest grades on the planet. And if they can get it out of these deep seated wells, this is going to be a long ball home run.
I believe so, yeah.
Okay. All right. He's also asking about Global Atomic.
I don't follow the company. I couldn't tell you anything about it.
Okay. That one sits on that. Robin is asking about Paladin. Thoughts on Paladin?
Paladin appears really cheap. They had an operating mine that had recent problems with flooding. I've been trying to do some work on it to try to determine if they can make this a profitable mine, because so far they haven't. So far, they're not making any money from it. And I'm trying to determine if they can. Now, if they can start making good money from it, well, then this could help fund their development project, help fund exploration, and it could be a big win. But if it continues to be a money burner, their operating mine, well, that recently flooded and caused operations to cease, well, I don't know, the company may struggle.
Okay, so right now you see it as a literal money pit, not one that you're willing to put in money now, but you'll be keeping tabs.
Yeah, not exactly a money pit. It's just it's not unprofitable, but it's not profitable either. So
Okay.
it's just can they turn it around? Can they make it work? And can they make it a profitable mine?
Okay.
And if they can, I think Paladin will do very well. If they continue to struggle with that mine and have to continue investing more money into it and continue struggling with profitability, I don't know, Paladin might struggle. It's something I'm wrestling with right now. It's a company I've been interested in, but I haven't made a decision on it.
Okay. All right. Robin, also, we hit Global Atomic. You touched on NextGen, asking about NextGen.
I think well, I mean, the prices now are a whole lot different than they were 2 months ago. So, so it makes your purchase price makes a big difference. And now suddenly people are super bullish uranium again. So I would have been a lot more bullish on NextGen a couple of months ago. As same with Denison. Denison is in the same camp here, and I think pretty much almost every uranium producer out there or uranium development company out there has gone way up in price over the last couple of months. So price makes a big difference, but even still, at today's prices, I think NextGen is going to be a good bet for those with a 7-year time horizon.
Okay.
But uh, a lot of speculators in the uranium space, it seems like they have trouble holding the stocks for 6 months. So you you really have to match your personal investment time horizon to how long it's going to take for the whatever developments are going on with the company to play out. And like my 7-year time horizon with NextGen is them getting into production.
Okay. Okay. All right. And Andrew wants to know, hey guys, what's Jordan's take on Sprot's $200 million recent raise and the broader implications to the uranium market dynamics?
Well, yeah, that was another thing that made speculators suddenly bullish on uranium. But I mean, if you have that the Sprott Physical Uranium Trust getting another $200 million, that's just going to go into buying physical uranium. So all else equal, that's going to push the spot price up. And when the spot price goes up, the stock price of the producers and developers tend to go up as well. So yeah, that's it's not that complicated. It's pretty simple. It's going to push the uranium price up, all else equal, and then it'll push the stock prices up.
Okay. Making it a little bit more enticing if you're a trader to take profits. Okay, kind of some miscellaneous questions here. Boy wants to know, good day, Steve and Jordan. Do you have a preferred rare earth metals and mining or mining royalty company to invest in other than EMX?
And not yet. I'm still doing research into rare earth companies, but I don't consider EMX a rare earth company at all. Like maybe they have some royalties on some rare earth projects, but they have a very long list of royalties, something like 200 different royalties. So I'm not intimately familiar with every single one of their non-producing royalties. Uh, but I consider EMX mostly a copper and gold play because that's where most of their current revenue is coming from, and that's where most of their future revenue is going to come from. But yeah, I'm still doing research on other companies.
Okay. He also asks, do you have an opinion on MP Materials?
No, I'm not familiar with the company.
Okay. All right. And Gene wants to know that this one is interesting. Your top mining stock picks for a 5 to 10 year investment horizon. Specifically, I'm curious about which stocks you believe offer the most upside potential over this period and the rationale behind your selections.
So if you want the most upside potential without taking into account risk, we talked about Eric Sprott earlier in this interview, and I think Eric Sprott's picks are probably going to align more so with the absolute most upside potential if you don't consider the amount of risk you're taking on. But in terms of lots of upside potential that are also reasonably safe, I'm leaning towards oil. The oil stocks in general, I think are pretty cheap. They're trading at very low multiples today, despite the weaker oil prices. And these companies are still making a lot of money at today's oil prices. But this is based on a few bigger like things happening in the economy. Number one is that I think society is going to continue to use fossil fuels for a long time. I think the transition to clean energy and the transition to electric cars is going to take a whole heck of a lot longer than a lot of people think. And there will continue to be very strong demand for oil and gas. So that's one thing. But also, um, as a whole, the world is underinvesting in oil. And a big part of this is the state-run oil companies. For example, Pemex, like a lot of the state-run oil companies have been taking a lot of cash out, taking as much cash out as they can, and not reinvesting like they should into new discoveries, into new wells, and so on and so forth. Like same thing with Petrobras. They're taking a ton of cash out of the company. and they're not reinvesting for future production, at least not to the extent that they should be to replace their current reserves or the at the rate that they're depleting reserves. So when there's this widespread underinvestment in oil, well, then that's going to be a strong factor to push the price of oil up in the future. And then also, especially when we're talking North American oil and gas companies, there's a lot of market pressure that should be forcing the price of gas in the US up. Now, we've already seen it basically double in the past year or so, but I think it has a lot further to go because there's still a pretty big difference in the gas price between the US and Europe, for example. So yeah, over let's just call it a 5-year time frame, I'd be looking at oil stocks. One I really like is Devon Energy. That's a US oil and gas play.
Okay, so you see, I was thinking the same thing. I'm kind of glad to hear you say the same thing, that over the next 5 to 10 years, it's not gold. I see that hitting really good here probably in the next few years. But if you got to give me 10 years, I'm not taking it. But I would take oil all day long. So you see, as society, we're using fossil fuels more and more, and we're using it for probably a lot longer than people think. EVs, you see, is taken they're although they are becoming more and more common, you see them as a lot further out than most people think. And number two, the world is underinvesting in oil exploration, which means we're kind of at a neat spot here where oil prices are low, but a lot of these companies are not exploring as much as they should. So that creates kind of a squeeze opportunity that we like in these commodity sectors. And you see one coming up for oil possibly.
Yeah, I mean, this huge underinvestment that's happening, that's going to directly correlate to a lack of future supply. And a lack of future supply should directly correlate to higher oil prices. Now, we need some patience, and oil stocks are very volatile. So, I mean, if you buy today, your oil stocks could easily be down 30% over the whatever shorter time period you're looking at. But if you're looking out 5 years, I I think you're going to be very happy if you buy oil stocks today, quality oil stocks today, and you hold them for 5 years. And I think the dividends you're going to be receiving are going to be out of this world if it plays out how I think it's going to.
Okay. All right. Last one from Marshall. He wants to know your thoughts on Ivanhoe's recent problems. Is there a good time to buy? So maybe go over what they're going through and what do you think?
Yeah, so they have an operating copper mine, Kamoa-Kakula, in the Congo, and they had some recent seismic activity and they had to close part of their mine. So what we don't know is we don't know how much this is going to affect reserves. We don't know how long that part of the mine will be non-operating. Now, maybe so in the mine they have these pillars. They're like leaving pillars of ore behind to support the ceiling. They may have to make those pillars a lot bigger. And if they have to make them a lot bigger, well, that's going to drastically reduce reserves. But on the other hand, maybe they choose to go another route, like doing backfill with cement, for example. And they mine out an area and then they fill it with cement. Well, I don't know how much, but that's going to increase operating costs. So how much will reserves fall and by how much? And will operating costs increase and by how much? Those are the kind of the big questions. We probably won't have answers on this for quite a while, but could now be a good time to invest in Ivanhoe. I mean, you have to be okay with extremely risky jurisdictions. They have 2 mines in Congo and 1 in South Africa. These are horrible countries, but they're all tier 1 mines. They're all extremely good ore bodies. So Kamoa-Kakula, that's high-grade copper, and Ivanhoe also has some of the best copper exploration ground in the world, I believe it's to the west of Kamoa-Kakula. So they may find more like Kamoa-Kakula. So what's going on with the company? So the stock price is way down. The stock price has fallen by 50% or so in the last year. And it's some of that weakness has happened recently because of what's been going on. There's also political instability in Congo, which has been a partial contributor to the weakness in their stock price recently. But a few things are happening with the company. Number one, they built a copper smelter on site. This was a huge upfront investment. I don't follow the company every single quarter, so I'm not sure if they're already finished building the copper smelter or if it's almost done. But either way, this is going to turn in from a huge expense to a moneymaker. And when you have things happening like that go from being a huge expense to a moneymaker, well, I mean, that almost always does good things for the company. And then also, they were building a big power plant on site at Kamoa-Kakula. Again, I don't follow the company every quarter, so I don't know if they've finished that power plant yet. But when that finishes, that cost to build that is going to go away, and their operating costs are going to go down. So that's also going to do very good things for their income statement every quarter. Now, they also have other things going on. They're still ramping up Kamoa-Kakula, although that's gonna take a hit this quarter and next quarter, probably for a few quarters until they get those recent seismic activities resolved and figure out that problem, the best solution for it. But also they were restarting this Kapushi zinc mine in Congo. So that went from being a huge expense to just recently is now a cash generator, and they're ramping that up. So, I mean, you have the power plant, you have the smelter, you have Kapushi, all going from being a cash burner to a cash generator. And then also you have their Platreef mine in South Africa, which they've been building for several years. And this is also about to go from a cash burner to a cash generator. They're going to have first production from that in 2025, but then it's going to really ramp up in later 2026 or 27. And then come those dates, it should be a huge cash generator. And Platreef is going to be an enormous mine. It's what do they have there? They have gold, rhodium, platinum, palladium, nickel, copper, I believe, are the main metals there. And it's an enormous mine, very high grade. It should be extremely profitable. So you have those four major things happening, going from burning cash to generating cash, all happening right now or over the coming quarters or years. So when you have all those things happening in the same company, is it probably a good time to buy? Yeah. But could the stock price fall further because of what's going on at Kamoa-Kakula? Yeah, absolutely. And if I had to guess, it probably will. But I don't know. I'm not a great trader. That's not what I do. So
You're not psychic, but you like it overall. I didn't know about that future one with all the platinum, palladium. I'm going to look more into it. That sounds enticing.
yeah, it should be an extremely profitable mine for them. Right now, they're spending a lot of money to build it, but when that goes to being a cash generator, well, that's going to do very good things for the company, assuming the government doesn't steal it.
Yeah.
I mean,
Governments are very good at theft. They call it taxes and other things. Expropriation. Okay. Well, this was awesome. Thank you very much, Jordan. I got to give a shout out to your newsletter. I'm a part of, I believe, 6 paid subscription newsletter, and yours is my favorite. You come out with an email around once a week or so, more around when the quarterly reports are coming out. But tell us about the special offer you have for viewers here today.
so this is what I'm doing with my own money. I'm sharing you what I'm doing with my own money and letting you know before I buy or sell. So if I'm going to add a new position to the portfolio, you have a chance to buy it before I do. And if I'm selling one of the positions in the portfolio, well, you have a chance to sell it before I do. So you're always assured that my interests align with yours. And you also get access to basically my best research. And like I'm doing this full time, I'm doing this during all of my working hours are going into researching mining stocks, and I share some of my best findings with you, or some of the most important findings that may affect our investments or the markets in general and things like that. I'm going to offer anyone watching this video today 10% off for as long as you're subscribed, but it's only for the first 77 people who sign up. I made this offer last time and it sold out really quickly. So if you're interested in that, you may want to click on that link below fast before it sells out again.
Thank you very much, Jordan. Your newsletter is by far my favorite. We will put your link in the pinned comment below for your discount, or click on this link right here and it'll take you straight to your discount. The first lucky 77 will get it, and after that, the window is closed. Thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.